So what I'll be looking for in January and February, or early as we get into 2012, is going to be stock price stability, whether the debt markets are able to respond and finance companies. We already know that there's going to be a very significant supply of transactions because we've got sponsor coverage bankers, M&A bankers, and industry bankers out talking to the private equity community every day of the week. And we know that they have a lot of companies that they're going to be bringing to market, so there will be supply. The question is whether there's going to be demand and whether the buyers, the strategic buyers in particular, are going to be able to complete these transactions. In terms of some of the trends that we're seeing in deal making, I would point to a couple of things. There's some of the things that we've seen in Europe for many years that we've used, like vendor due diligence, making its way back into the U.S., making its way into the U.S. for the first time. And we're seeing more and more of that with our U.S. clients. So as an example, a quality of earnings report that would be prepared by the seller in advance of going to market, which is very common in Europe, but new in the U.S., we're using it more and more. Having the environmental reports ready in advance is a big trend. What you see in Europe is actually all the commercial due diligence, so even the business due diligence is prepared by a third party and then given out to the buyers. And essentially, you're running a reverse IRR auction. Whoever's willing to pay the highest price based on the diligence that's available wins the asset. I don't see we ever get there to the U.S., but what these trends really are doing is shortening the time and risk associated with a transaction, which is a logical reaction to the environment that we find ourselves in.